Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's a brand new day of trade, Tuesday morning. SGX Nifty, however, is giving out a negative signal for the Indian market. Over the next 30 minutes, we'll be talking about the cues for trade, the stocks in news, and of course, we'll also be talking about Apple's first India store that will be opening its doors to customers today. And of course, if you have any stock-related queries, send them in to us on our live feed. We'll have them addressed by our technical expert on this show. But before we do all that, as usual, let's take a look at the top headlines at this hour. Wall Street kickstarts an earnings-heavy week on a firm wicket. Banks like Goldman Sachs, Bank of America, Morgan Stanley and tech heavyweights Tesla, Netflix and IBM will be reporting quarterly numbers this week. Meanwhile, Asian markets open mixed. China's first quarter GDP beats estimate, rises 4.5% on a YOY basis versus estimate of 4%. The SGX Nifty, as I mentioned, is hinting at a lower start for the Indian market. Watch out for SBI today as board meets to consider a $2 billion fundraise via unsecured notes. Also stocks in focus today are Z, Angel One and Jubilant Food. Apple's first retail store in India will open its doors to shoppers in Mumbai later today, followed by an outlet in Delhi on the 20th of April. CEO Tim Cook is in Mumbai for the store launch. A meeting with Minister of State for IT Rajiv Chandrasekhar is also on the cards to discuss India becoming a manufacturing and design hub for Apple. Well, let's now bring on board our technical expert for today, Sacchitanand Uttekar, who's from Tradebulls Securities, joining in this morning to talk about the cues for trade and, of course, to get all your stock-related queries answered. Good morning, Sacchitanand. Good to have you on the show. Well, we did snap out of a 9-day rally and, you know, the SGX Nifty once again is hinting at a lower start. So what is the kind of levels that you'll be watching out for on the Nifty when it comes to support and resistance?
Good morning, Nandita. Nandita, it has been an interesting start for the week after the 9 days bullish sequence. Yesterday, we saw Nifty not only slipping below its previous day swing low, but also registering a close. Now, if you look at this entire sequence, in the last 9 trading sessions, Nifty has never closed below its 5-day exponential moving average. So probably the support at 17,700 may hold on even for today's session. But if you look at the candlestick formation, this large size candlestick formation resembles engulfing bearish formation. So I think this is a good indication that probably the kind of momentum that we were seeing for the last 9 trading sessions, that momentum could be stalled. And probably for today, we may see Nifty confined within this particular range of 17,650 on the lower side to 17,750. So we are expecting that it could be a very neutral day. Probably an inside day kind of a formation would be exhibited at the end of this particular session. But in case if Nifty registers a close below 17,630, then probably the decline or the pullback that we have seen so far, that particular pullback may extend in the coming session towards 17,520. So I think 520 is a very critical support for this particular week. Its 200-day exponential moving average is placed out there. So as of now, we are not expecting this particular pullback to extend towards that level. But for the day, probably we may see an inside bar kind of formation.
Right, so those are the levels to watch out for on the Nifty for today. But let's get on board the stock of the day. According to me, that should be JustDial because it's reported a strong set of numbers. Revenue growth has come in at 5% on a QOQ basis and 39.5% on a YOY basis. In fact, YOY revenue growth has also looked pretty strong, and margins, mind you, are at a 2-year high. If you look at the stock, Sacchitanand, it has done pretty well for itself on a YTD basis, up about 8% or so. And even on the last 1 week or so, it's done fairly well. Do you expect more upside on this counter, given the fact that the earnings are looking pretty good?
Well, if you look at last few quarters, the last few quarter price action has been completely muted. But if you look at last 2 weeks, we have already seen a good surge. It has still not, managed to sustain or surpass above its 200 weekly exponential moving average. So probably I think the resistance near to that particular level of around 670 would be important. So in case if we see it, confidently trending above it, then probably we may see a change in trend soon in this particular counter. But as of now, the range is well defined. 650 on the higher side, has been acting as a support and a supply zone. But on the lower side, side, 600 has been a decent support. So probably we may see, the stock reacting within this particular range. A firm breakout on a closing basis above 670 is the need of the hour, probably to change the course of this particular stock. So as of now, I think the best of the news is out. We've already seen a good rally. I won't be surprised in case if we see some distribution near to this particular resistance. So.
Right. Let's also talk about the brokerage call of the day. Bernstein has initiated its covering on delivery with a market perform rating and sees a target at somewhere around 360 rupees or thereabouts. It believes that, it is a secular story, but returns may be capped. In fact, the long queue of PE exits that we have seen over the last few months, that could cap returns going forward. Obviously, these stocks have come off their listing price. Come off quite a bit from their listing price. I know there isn't a lot of data to refer to at this juncture, but on the charts, how would you read a delivery now?
Nandita, nothing exciting on this particular chart. It has been in a sideways consolidation mode. We saw a base in the month of February. That particular base at around 300 has still been holding well. But on the higher side, we saw a very quick swing towards 360 levels, and probably after that, we have really not seen much of action on in the price. So probably we may see this particular consolidation getting continued. The immediate level to track on the higher side could be somewhere close to 350 levels on. And on the lower side, I think that 300, 320 kind of a support may hold on. So probably we may see this sideways consolidation, to continue for the next couple of at least months going forward.
Right. Before I get on board the next guest on the show, I would want to get in some queries coming in on the IT pack. Of course, we saw the Nifty IT index lose 5%. In fact, Infosys was hammered out of shape after its disappointing fourth quarter show, down somewhere around 9.5% or so. Naveen has written in and he wants to know about Infosys. What should one do now, given the fact that the stock has seen its worst sell-off or worst crack since COVID-led sell-off. In fact, even IT index is at a 52-week low, if I'm not mistaken. So what is your view on the entire IT sector, particularly Infosys now?
Well, if you look at yesterday's reaction, obviously, it was led by Infosys. But if you look at the levels play, we did see some signs of resistance at around 1450. We saw some negative built up there. A reaction on the lower side was something which was not surprising, but the extent of the fall has been surprising. So if you look at the levels from here on, I think 1150 on the lower side should act as a very strong support. Any declines towards that particular level should be utilized to add this particular counter in one's portfolio. Because if you look at the entire performance, it has been in that lower top, lower bottom sequence or a bearish sequence almost for more than a year now. So I think this could be the last leg of the correction. The immediate level on the higher side, wherein the strength could be evident, is around 1310. So I think in case if we see it again pulling back above this particular level, that will be a good indication that whatever worst was to be witnessed in this particular counter is already been done, and probably we may see some stable price action here. So immediate basis, clearly we are looking at a bounce back towards that particular level of 1300. So the reaction is almost done, and probably we may see it consolidating within this particular range. In case of any slippages, I think that those slippages could be healthy, and one should consider this particular stock in their portfolio.
Right. Well, that's the call on the entire IT pack as well as Infosys. Hold that thought, Sacchitanand. We'll come back to you, but let me also get on board our guest for today, Rohan Mehta, who's the CEO and portfolio manager at Turtle Wealth, to discuss where the markets are headed, what the FI trends are looking like, and what are the sectors that you should take position in at the current juncture. Good morning, Rohan. Good to have you on the show. Well, we are just coming out of a 9-day rally, which also happens to be the longest winning streak in about 2 years. FIIs have turned buyers. In fact, they've pumped in over $1 billion in a matter of 10 sessions. Do you expect this trend to last? And do you see the Nifty reclaiming that 18,000 mark anytime soon?
Yeah, hi, good morning. I believe that market is onto the trajectory of the decade's biggest bull run. It is just the starting of what it has begun. And, as it is said that, your patience will be tested, but your conviction will be rewarded. 19 months, there has been no activity in the markets. And then we see people are losing patience. The redemptions are starting to come from mutual fund PMSs, and we see that volumes are dropping with, the demat accounts are also dropping. These are all indications which says that people are losing confidence. And believe me, it's not the bull market where you invest or bear market you invest in the big markets where nothing is happening, and that's where the rewards are happen. So overall, we believe that the things are going to happen onto the right frame. The first indication was coming onto the front where we saw the interest rates are getting muted, and overall the world is going on to a stable side, whereas we meet nearly about 3 to 4 management a week. And believe me, not a single management I've heard speaking about a slowdown or something where the things are not very strong. They're speaking on to capex building, they're speaking on to the value creation, and they're speaking in how India is going to be one of the biggest superpower in next 10 years by 2030. So this all contributes to be a very, very strengthful thing in what India is going to be. Maybe what was US in 2000 or what was China in 2005, 2010, we have started to go into that trajectory. We are near to be the most populated country in the world with good education, good young people, and good people who want to progress. So over and over on the macro side, leaving the international side ahead, India as such as an economy is getting stronger and stronger, and we believe that it is just the starting of the biggest bull run which we will see in the decade from 2023 half of financial year to maybe 2027. And the most interesting part is that the sectors which are going to create wealth are the sectors not which has created wealth in last decade. So we have to find certain sectors which are going to do much more better than what they have done previously.
Right. When you talk about we have to look for those sectors, which sectors, according to you, would fit that bill now?
Yeah, so we were talking about ITs and consumers. Believe me, according to our theory, if you see 1980, 1990, manufacturing did good, and then 1990 to 2000, IT, and 2000 to 2010, it was infrastructure, banking, real estate, and then it was quality chemicals. I just had this renaissance of chemicals. 20 years chemicals didn't do anything. In last 5, 6 years, chemicals were 40x up, and that's how the power of the changing on the sector comes on to the point. We believe three sectors which will create an exceptional wealth is coming onto the part of manufacturing. Second is we believe that PSUs are super available at a dirt cheap valuation. So manufacturing, PSUs, and infrastructure. A lot of sectors comes into the picture in this all segment. But if you see our GDP is based into three particular areas, that is agriculture, manufacturing, and services. In last 10 years, services took over agriculture and manufacturing, and now we believe that what India would be onto the strongest GDP, manufacturing will take over service for this decade.
Right, even the realty basket has, of course, you're talking about manufacturing, the realty pack has made a comeback, especially after the RBI's surprise pause on interest rate hikes. So how are you viewing this entire rate-sensitive basket, like the auto pack, the banks going forward? Should one have a fair bit of exposure to these sectors in their portfolio?
Yeah, see, if you see the economic cycle, the first indication of market to drop is the rise of interest rates, right? And then it is the share prices decline and the commodity prices decline, and then the reserves decline. That's what we have seen in Indian markets all over the world. The first indication of the rising of the market starts with pause of interest rates, and then of course the cut of the interest rate. This cycle can be from 3 quarters to 3 years depending on to the economical cycle, but that what we believe that in Indian markets we don't have now more major place for rise of an interest rate, and that includes auto is our top sector which we are looking forward for a medium to long term view. Real estate is still not a sector which we are very interested with. As such, real estate we are interested, but in stocks we are not getting certain things which can create a multiple wealth for our investors. So real estate we are bullish, but stocks we are still finding to invest through. But yeah, on auto segment, I think so. Auto is onto a great roller coaster rally with EV coming to the picture. It's a pure value migration, and in that value migration, the companies who will be the first mover advantage and taking the advantage of the Indian consumers. Like I'll give you an example of TVS Motors, Hero, Honda, and Bajaj Auto being the three largest manufacturer of two-wheelers. But if you see TVS Motor in last 1 year has done 75% returns in comparison of Nifty Auto to be 20% returns and Nifty 500 to be flat. So that gives you a resilience that these companies are on a different spree, and that's what we need to find as a portfolio manager, that which company can make a first mover advantage in the value migration story.
Right, Rohan, we would love to have a longer discussion with you, but I'm afraid we are running out of time. So thanks a lot for taking out time and sharing your insights with us. I will touch base with you later on and, maybe get you for a longer interview sometime soon. Thanks a lot for joining in. Well, with that, let's go back to Sacchitanand and take up some viewer queries that are trickling in this morning. A few of them are coming in from the metals basket. Siva has a query on Hindalco, and we also have a query on Tata Steel. This is coming in from Karan Mhatre, and he wants to know your thoughts on whether one should accumulate Tata Steel, for a time horizon of 3 years or more. What would you advise these investors to do?
Well, definitely, both these counters should be a part of your portfolio. If you look at the trend of metals, recently we have seen a good amount of correction here. But if you look at the trend from a trend perspective, the higher top, higher bottom sequence continues. So I think the recent, decline that we saw in Tata Steel on the weekly scale, we saw a very strong bullish reversal formation, a bullish Rami formation at that particular support. So I think it's a decent level wherein the stock can be accumulated, keeping a stop loss at somewhere close to 95 on a weekly closing basis. We are also anticipating that probably in a year's time, this particular stock can scale back to 140 levels. So definitely a healthy zone to accumulate this particular stock in your long-term portfolio.
Right, so that's the view on the metals basket. I hope this answers your queries. Moving on to the banking pack, of course, SBI board is meeting today to consider fundraise. So I want to know your thoughts on SBI right now. And of course, we have a query coming in from Ishwarya Purna Kumar, and the query here is on UCO Bank. Now, we saw a good run on some of these banks like UCO Bank, Indian Bank in yesterday's session. How should one approach some of these PSU banks now?
Definitely keep them on your buying radar. If you look at the SBI itself, it has again reconquered about its 200-day exponential moving average. The OI addition in yesterday's session was relatively better. What we're expecting is that this particular momentum which has been generated in the last week, this particular momentum should continue. And we may see SBI again scaling towards 560, 565 kind of a zone. If you look at the ADX placement, it has given a fresh breakout above its 25 marks. So this is a very good, healthy, strong sign of this particular momentum getting continued. So from a trading perspective, she can keep a stop loss somewhere close to 530 on a closing basis and accumulate this particular counter for a target around 565. If you look at UCO Bank, the weekly structure has been very significant. We have already seen a good breakout from a falling wedge formation. Clearly, there are signs of an impulse. If you look at the daily chart, again, there's a continuation pattern. So probably the floor that has been set around 22, 24, I think this particular floor should hold on. And we may see it scaling back towards 40, 45 zone in next couple of months. So definitely even this particular zone is a healthy zone to accumulate this stock in one's portfolio. Just ensure that you keep a stop loss somewhere close to 25 on a weekly closing basis.
Right. Couple of queries coming in on Coal India. Gulshan Kumar and Hardeep Singh have written in, and he wants to know your thoughts on coal. In fact, they want to know your thoughts on Coal India. The stock is moving towards its 52-week high now. Time to buy into this, or if you are holding it, how long should you hold on to it?
Well, the stock is performing well. In fact, if you look at the monthly and the weekly structure since 2021, we are seeing a very strong, classical rising channel. And this particular channel has a base somewhere close to 210. we saw a double bottom kind of formation reconfirming that particular support. So we are expecting that the lift off that we have seen right now, it should continue. Probably the stock can scale back to around 260 levels, but on a higher time frame, we are expecting a move towards 298, 300. So definitely, this particular stock can be a part of one's portfolio. From a trading perspective, the stop loss can be placed at around 215, but the immediate target that we are looking at is placed somewhere close to 240. Then probably we may see an extension towards 260. So I think the trend is very confident, and the support base has been reconfirmed. So probably this is a good time when the stock can be accumulated.
Right. Another query coming in is on the cement pack. Satya has written in and he wants to know whether this is the right time to buy into Ultratech. Cement pack has been doing well over the last few sessions. Would you advise investors to buy into some of these now?
Well, we have already, long in this particular counter, we are expecting a move towards 9,100 in the years to come. There is no sign of any exhaustion or, or a reversal here. But probably, it is a good idea to always accumulate this particular counter on a decline. So probably wait for a decline towards 7,500. I think that will be a good support level wherein, you can accumulate this particular counter from a long-term perspective. As of now, there is no signs of exhaustion. So probably whenever the decline comes, I think that decline could be an opportunity for some long-term positioning. So as of now, I think you can just wait out, wait for a decline and then accumulate.
Right, wait for a decline. A couple of shares I wanted to get in your thoughts on, even though we are a little out of time, but still, Angel One has reported a strong set of numbers. Profits have jumped 30%. I want to know your thoughts on how this stock looks on charts. And Quickheal as well. It has reported loss versus a profit of 28 crores on a YY basis compared to last year, in fact. And revenue has plunged over 50%, that too on a YY basis. These two stocks, JustDial and Quickheal, Angel One and Quickheal, how do we look at playing these stocks now?
Should be avoided. The trend still remains weak. Every now and then we have seen these pullbacks, but these pullbacks don't really, change the course of the trend. So probably the trend should continue. It's a low top, low bottom sequence, and it's a good idea to, reduce your positions in case if you're long. But when it comes to Angel One, I think, the structure is decent enough. We have already seen multiple support signals at around 1100. So I think the base looks confident. Any declines in this particular counter should be considered healthy. We may see it oscillating within this range of around 1700 on the higher side to 1100 on the lower side for the next couple of months. So probably this is a good, stock to accumulate. But Quickheal, I think it should be avoided.
All right, avoid Quickheal. Also, Jubilant Food, Coca-Cola India has bought a 15% stake in its associate firm, #loyalty. If you look at Jubilant, it is down somewhere around 14% on a YTD basis, very close to its 52-week lows. Would you advise investors to stay away from this, or is it the right time to buy since, it is available at, pretty cheap levels right now?
Well, it has already witnessed a decent decline. In fact, for the last 7 quarters, the stock has been trending lower. I think from a trend perspective, we are seeing some sideways movement. The bearishness in this particular counter looks limited. So probably even from a trading perspective, look for a short covering signal. But I think this is a decent zone wherein the stock can be accumulated in one's portfolio. Just keep a stop loss somewhere close to 370, 375 on a closing basis. And I think probably we may see this particular stock turning its course soon. So I think it's a relatively stable zone where the stock can be considered in one's portfolio.
Right. Sacchitanand, give us 2 stock recommendations for today and also share your thoughts on Z. Given the fact that Invesco has exited its stake from the company, do you think much of the overhang is out of the way for Z? And what would your 2 recommendations for viewers be for today?
Well, when it comes to Z, again, the structure is fairly on sideways, indicating a sideways move. 220 remains a stiff resistance, but on the lower side, we have seen multiple evidence of a support at around 190. So even if we see slippages towards that particular level, I think the selling pressure could be absorbed. So we are expecting this particular range bound move to continue when it comes to Z. From a trading perspective, we have two recommendations for the day, both on the long side. If you look at Bajaj Finance, yesterday closed its session at its day's high. If you look at the 60 minutes data, we clearly have a bullish cup and handle formation. The daily ADX has given a breakout above that 25 mark. So this is a good, strong sign of a momentum. We're expecting a positional target of around 6130. The stock can be accumulated from a trading perspective. The stop loss should be placed at around 5908. The other counter from the PSU names, wherein the setup is very similar to SBI, is Canara Bank. We have already recommended this particular counter to our clients. We are expecting a trading move towards 305 and a positional target of around 315. The stock can be accumulated with a stop loss at around 293.
Right, so those are the stock recommendations coming in from Sacchitanand this morning. Thanks a lot, Sacchitanand, for taking out time and addressing all our viewer queries this morning as well. Well, with that, it's a wrap on the show. But before I leave you, of course, Apple will be opening its first India store in Mumbai today, and CEO Tim Cook is in India. We leave you with some visuals of Tim Cook in India, and of course, we will be getting you live coverage from the first Apple store in India throughout the day. So stay tuned to Money Control for that. And with that, it's a wrap from my side. Stay tuned to Money Control.